Domino's Pizza stock, ticker symbol DPZ. They just released earnings and the stock went up roughly 5% as of recording this video. Looking at today's earnings, we see some good results with a beat on EPS and revenue in line with expectations. But more on that in a minute. People love Domino's stock because of multiple reasons. One of the things being the dividend, and I understand why with dividend yield at 1.2%, which is a decent number. But look at that dividend growth, 10 years of dividend increases, at a really high rate in the past 5 years. If we look at the 5-year total returns, we see that DPZ beats the S&P 500, and this is also driven by today's events. So, could this be the perfect time to buy Domino's stock? Well, by the end of the video I will give you my 3 price targets, so make sure to stay tuned and see how I build up to these price targets. I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does Domino's do? Domino's is a restaurant operator and franchisor with nearly 20,000 global stores across more than 90 international markets. The firm generates revenue through the sales at company-owned stores, royalty and marketing contributions from franchise operator stores. Domino's is the largest player in the global pizza market, ahead of Pizza Hut, Little Caesars and Papa John's. Revenue for the first quarter was reported at almost 1.1 billion, up almost 6% year over year. And to me, this looks pretty decent. Gross margin for US company-owned stores increased also a small amount, which is very nice. Supply chain gross margin increased 210 bps, which is really nice. Because of that, income from operations, net income and the EPS all increased around 20%, which is again really nice. For the upcoming years, Domino's expect to see 7% annual global retail sales growth and 1,100 annual global net store growth. And last but not least, it is expected that annual income from operations will increase 8%, meaning higher margins. Looking at the revenue breakdown, we see that supply chain is by far the biggest segment, and US company-owned stores is representing around 9% of the total revenue. We also see that Domino's is rapidly increasing stores internationally, with 144 openings in the first quarter of 2024. Another interesting number is the same-store sales growth. For Domino's, it is really easy to generate more revenue by opening new stores, but you want the existing stores also to grow in revenue. In here we see that US company-owned stores increased 8.5%, which is a great number, especially since it is higher versus 2023 growth numbers. So to me, these numbers are looking really good. And now that we know a bit more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue with diving into the fundamentals. Domino's is a 18 billion market cap company. PE ratio is at 35, indicating they are overvalued. Later in this video I will show you my 3 price targets for Domino's stock, so make sure to watch until the end. Revenue is at 4.48 billion, and in this graph we see that revenue went up in the long run. Most recently, revenue is slowing down a bit. Margins are increasing in the long run, and to me this is looking really good. But ever since 2020 margins are stabilizing. But with today's report I think it is looking really bright again in the coming years. EPS is pretty much the same story as the revenue and margins. It is growing pretty steady and consistent over a longer period of time. But most recently it is slowing down. Analysis expected EPS is going to grow at pretty high numbers from here, we are looking at 8 to 14% growth per year. For the revenue analysis, expect pretty steady numbers with 6 to 7% growth per year. Return on assets is sitting at 31%, which is a great number. Return on equity looks really bad, and the most important number, return on invested capital, is sitting at roughly 62%, which is an insane number. Current ratio is at 1.5, which is a great number. It is also pretty good historically. So this looks good to me as well. Right now Domino's has 5.3 billion in debt, and I prefer companies that can pay down at least a big chunk of their total debt with the total cash. Domino's has 300 million in total cash, so they can't pay down a big chunk of their debt. To me, this doesn't look any good. So it is very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run, but not at a steady and consistent pace as of lately. Shares outstanding are decreasing over a longer period of time. To me, this looks really good. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 1.2%, which is a decent number. Annual payout is a little over $6 and payout ratio is at 33%. I prefer 50% or lower, so right now they have only 68% left in cash to buy back shares, pay down debt, do acquisitions and all other things. And now it gets really interesting. The 5-year growth rate is at 17%, which is a great number. And they have increased the dividends for 10 years in a row, which is pretty impressive. If you take a look at these numbers, the dividends paid since 2012, you see that Domino's did increase the dividends at a high pace historically, but growth is slowing down here. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. And here we see that historically it looked really good. However, payout ratio is increasing a bit over the years. To me, this is not a good sign in general. In this graph we see the expected dividends in 2024, 2025 and 2026. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It is expected to increase at a decent pace from here. And overall these dividends look really interesting to me. How about the historical returns? I decided to compare DPZ stock with the overall market, in this case the S&P 500. Next to that I added QSR, one of the main competitors. On the 5-year chart we see that Domino's beats the S&P 500 by 4%, which is very impressive. QSR had by far the lowest return with 31%. And keep in mind, this is including dividends. On the 1-year chart we see that things are changing drastically with almost 50% return for Domino's, while the S&P 500 is sitting at roughly 28%. QSR had again the lowest return with 9.5%. On the 6-month chart it is again Domino's that is beating everyone in the list, by a significant amount, again very impressive. On the 1-month chart it is again Domino's that is beating everyone, also driven by today's event. Bottom line, Domino's managed to beat the S&P 500 in the long run and in the short run. So could this be the perfect time to buy Domino's stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets. Starting off with revenue growth. For the revenue growth I'm filling in 5, 6 and 7%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm putting in 11, 12 and 13%. For the free cash flow margin I'm putting in the same numbers. For the PE ratio I'm putting in 20, 22.5 and 25. For the price to free cash flow I'm putting in the same numbers. They have a mode in my opinion, but they're a bit slow growing. My desired annual return is 12.5%, since I can get an easy 10% average annual return with owning an ETF. Right now, Domino's stock is at $524. I hit analyze, and we only see red numbers. We have a low price target of $232, we have a mid price target of $293, and we have a high price target of $368. To me, the high price target is the most justified here, telling me that this stock is still overvalued. Which price target do you think is the most justified? Let me know in the comments down below. My final conclusion on Domino's is that I really love the company. They have a moat in my opinion, especially with the growth in margins. But the stock really tanked a lot in the past year. To me, the valuation is a bit of a problem right now. Most fundamentals look really good, as mentioned before. Dividends are also looking really interesting. The yield itself is a bit low, but growth numbers are pretty impressive. The only downside, growth is slowing down here. And as said a second ago, the valuation is where the problem is right now for me. I'm skipping this stock and I'm waiting for the stock price to come down before I open a position. In the meantime, I keep following this company since I do think they are doing an amazing job. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.